Good morning, everyone. Thank you so much for joining us this morning. My name is Angela Schultz. I'm currently chairing the Gauteng region for ASDSA, and I'm a skills development practitioner. We have first up our very own Angelique to take us through the house rules before we begin in earnest. Thank you, Angelique.
Thanks, Angela. It's Angelique here. We are going to keep everybody's mics unmuted. If you have any questions or comments, please use the chat function to ask questions or give a comment. Angela will then relay this to the speaker. Please ask questions because the speakers would like to have some interaction from you. And other than that, enjoy the session, and there will be CPD points after this, so watch out for the questionnaire at the end.
Thank you, Angelique. And once again, welcome to our belated Valentine's event. How ironic, we are going to be speaking about tax issues in the month of love, because we all know how much we love SARS. But yes, first of all, may I just hand over briefly to our national chairman, Sharon van den Heever, who wishes to make a short announcement to our members on the line. Good morning, Sharon, and welcome.
Good morning, everybody. Welcome to the session for today. Sorry that I'm hijacking your session this morning, but it was a perfect platform for us to do a couple of announcements. So just to give the members a little bit of an update, I wanted to let everybody know that we had announced towards the end of February that we wanted to do some call for nominations for our regional chair positions. So it's not that we're unhappy with the fantastic jobs that our regional chairs are undertaking, like Angela and Elaine and Morena and Doc Floris Prinsloo and Maxine and Elsie, thinking that I'm not really leaving anybody out. I think that's everybody that is on our regional chairs at the moment. But from a corporate governance perspective, we had discussed that we regularly want to undertake, opening up those calls for nominations to our membership base and allowing our members to nominate themselves for those positions. I do want to make it very clear that they are non-paying positions, so you volunteer for those positions and give up of your free time to chair those positions for us. And they do take a little bit of interaction with us. So you do give up of whatever free time you have, and we do need to get permission from your companies that you work for, or if you're self-employed, you would give up of your free time, and very often that is a little bit of after hours time. So we will be putting out calls for nominations for regional chairs. You can nominate yourself, or you can nominate the current chair people that are in the various regions if you think that they are doing a fantastic job, which I think that they are currently, and you can nominate somebody else for those positions. What we are wanting to achieve from this is to, again, as I say, make sure that we are complying with corporate governance and giving opportunities to our members to nominate themselves, and then also to see if there's anybody else that wants to also assist those chair people that are running the various different regions, and look to other regions as well. So if there are any of our members that are in the Mpumalanga, Limpopo, Bloemfontein, Northern Cape, I think the Eastern Cape is covered by Maxine. So if I've left any region out, it'll be nice for us to see if there's anybody else that wants to chair those regions. Although we are running these as virtual platforms, we should go back to a situation where we'll be having face-to-face meetings again. And it will be nice if we can continue with virtual platforms, but also have a possibility of face-to-face meetings as well. That's the first announcement. The second announcement is we recently had some board nominations. We've had, out of the 3 people that were nominated onto our board, we've already had 2 resignations. We're going to be dealing with those resignations at our upcoming board meeting on the 23rd of March. And we're going to get some guidance from our board as to how we're going to be going forward with those resignations, and whether we're going to be putting out some calls for board members on our board. So we just wanted to keep the members updated with where we're at the moment with regards to calls for board members, as well as the regional calls for nominations for chair people. So thank you very much for giving me the time this morning, Angela. I appreciate it. And I'm sorry that I took up too much of your time. And we're very excited about the guest speakers that we have coming up in the next couple of minutes. Thank you very much.
Thanks so much, Sharon. Much appreciated. We now move on to our speakers this morning. Our time is limited, but you may ask you post your questions on the chat, as Angelique confirmed, and I will moderate and post the questions to our speaker at an appropriate time. Please ask your questions. The questions are most welcome. We will, of course, time permitting, be able to open up for a chat for questions after each speaker. The presentations and supporting documents will also be made available to all our attendees after the workshop this morning. May I now introduce Mr. Rustim Ariefdien. He is a disability expert extraordinaire. He's an entrepreneur who has owned and spawned various enterprises specializing in disability economic empowerment. He has a postgraduate diploma in disability studies from UCT, and he assists business in letting the ability of disability enable their profitability. He achieves this through skills development, employment equity, and socio-economic development elements of the BEE scorecard, ensuring compliance to legislation and employment equity, as well as skills development. And speaking from a voice of experience, Rustim himself is a person born with a disability. Welcome, Rustim, and thank you for joining us this morning.
Thank you very much, Angela. Can I screen share now?
You may go ahead.
Okay. Can everybody see my screen?
We are seeing your screen, thank you.
Good. So thank you very much for the opportunity to present here today. I always think that skills development facilitators are enablers in terms of disability economic empowerment, because everything that works around skills development within companies kind of stems from you. So I'm going to be covering, I'm going to give you a little bit of background to start off with, then some disability processes that I want to unpack. Then I'm going to move on to BBBEE, which I'm going to touch on briefly, but I want to focus a lot of time on skills disability learnerships, and then end off in terms of what are the SDF opportunities within skills development. So let me start off first by looking at just some background in terms of disability itself. So education. Education is a huge educational gap. Persons with disabilities, to a certain extent, hasn't had the opportunities that non-disabled have had, and therefore you'll find the level of education not very high. Yes, there has been special schools, but even the special schools haven't really been able to meet the requirements in terms of matric or NK4. And even the TVETs and the universities, they don't really have great disability numbers. In fact, most public educational institutions have a 2% target because that's government's disability target. So in terms of disability employment equity, we are supposed to achieve 7.5%. If you look at the Employment Equity Act and the guidelines in terms of the Employment Equity Code of Good Practice, at present, we're only at 1.1%. In terms of the CETA trends, basically the Skills Development Act speaks about 4%. CETAs aim for that. There's even CETAs that aim for 2%. And you can already see that there's a kind of a disjuncture between what employment equity requires at 7.5% and also what the CETAs are saying. In fact, another trend that I can tell you about, we're doing the census at the moment. And the government acknowledges that 7.5% is probably not the target. If you look at the International Labour Organization and the World Health Organization, their statistics, according to global trends, you're looking at about 15%. So it could very well be that the current census is going to demonstrate that those targets are going to be increased substantially, and of course that presents a risk. It presents a risk to your clients. Then our disability skills targets. As I've been talking about the difference between what could be 15% and that 1.1% where we currently are at the moment, how do companies start to bridge that divide in terms of compliance? Now, there has been compliance that has been established in 1998 when the Skills Development Act and Employment Act started. However, there hasn't been a lot of progress in that regard. So besides compliance, what are the incentives to employ persons with disabilities? And I think that's what's really important. So let me touch the area of WSPs and ATRs. Of course, there's a lot of reporting that happens through this type of mechanism. And the reason why I started by saying that you guys are critical in this process is because you understand what the companies need, what they want, and where they are heading to. So therefore, you can assist in their compliance, but you can also assist in the opportunities that exist for them. So let me just touch on briefly some disability processes. I'm sure when you start looking for these disabled people, you can't find them. They're like needles in haystacks, and to a certain extent that is true. But a lot of it's driven by the fact that the educational gap and the skills development gap is so huge. Then, of course, you've got reasonable accommodation. It is something that is important to understand. How do you accommodate the person reasonably in the world of work? And let me not expand further on that. But one of the important processes is learner support, specifically in learnership, skills development learnerships. And learner support does not only pertain to disability, it goes across the board. Learnerships in South Africa's throughput rate has been very disappointing. And that is why government is constantly faced with the dilemma, do they continue the skills development regime? And by and large, they have continued to do this, even though there's been this big disconnect. But then again, if you look at the entire educational skills development arena in South Africa, it's the same. We spend so much money as a country on skills development and education, and yet we still have serious challenges. So as I said, let me just touch on triple BEE. So there are two elements in the scorecard that I'm going to highlight. The one is the skills development part of it, and essentially this is the part that you guys probably focus on a lot. You probably have a lot of the triple BEE consultants speaking to you about, where's the evidence in terms of this particular part of the scorecard. The one thing about skills development and disability, it's a quick fix. Now, I'm sure you know that triple BEE is an aggro spend, but companies are more and more starting to understand that skills development actually has a return on investment, and I'm going to unpack that a little bit later. The other side of it as well is socioeconomic development. So this doesn't necessarily concern you directly. However, if you have a challenge like recruitment, which is a huge challenge, a company can very easily invest in the socioeconomic development side by being able to put recruitment programs in place or bolster recruitment programs. That, of course, feeds into skills development. And as you know, skills development is a major part of the triple BEE scorecard. It's a compulsory area that you have to score on certain minimum in. So therefore, it is very important. Then let me touch on learnerships. Now, besides the conversation that I'm presenting, there's going to be another presenter that's going to be focusing a little bit more on tax allowances. I'm not going to touch too much on the tax allowance, but and I'm going to talk around it. So DG grants applications to SETAs. The one thing I discovered is that SETAs do not seem to get a lot of traction from their stakeholders in terms of DG grants. So I've done about over 7,000 learnerships for persons with disabilities. And I've always wondered, why is it, specifically with SAIPA, that I used to do projects of 500 and 100 and 200 with SAIPA? Why did they give that many disability learnerships to one particular entity? And the reason for that is that since the commencement of skills development, there has not been a lot of uptake from employers. It's changing. I think employers are starting to realize that, especially with disability as well, is a very easy way to achieve certain objectives. So there is a bigger uptake. However, it's not really happening very progressively or very proactively, I would say. And once again, the skills development facilitators are the enablers here. Now, I understand why there's a challenge in this regard. And it's onerous, it's a lot of red tape, the seaters are not very organized, you can't exit the learners, and therefore, even though the benefits seem to be very lucrative, it doesn't happen. Yes, that is absolutely true. Services seater, for example, and I'm mentioning services seater a lot. I sat on the council of the services seater, so I understand their processes. At one stage, they had a 3-year, 4-year backlog in terms of certifying learners. But of late, besides the systems problems, and I'm sure you guys know about the system, the systems are down at a lot of seaters at the moment. They're transitioning their systems. That, of course, creates problems. So notwithstanding that, they have been able to streamline their processes. So when it comes to disability learnerships, discretionary grants, applications to seaters is a very good way in order to get into disability learnerships. And keeping in mind that at the end of the day, the company needs to meet employment equity targets, and learnerships is a very good way to try before you buy. I know it's not a very popular statement, but it's real. It's a reality. You know, that a learnership is one employment contract that says, after 12 months, thank you very much, but your services are no longer required. Compared to the other legislation that we have in South Africa, you know, once you employ somebody and they employ for 3 months, you they deem they're permanently employed. With the learnership, you can have somebody in your employ essentially perpetually as long as you renew the learnership. You're not having to employ them permanently. So the SARS benefits, employee tax incentive. Now, I must say, I am very, very surprised that a lot of companies do not understand what the employee tax incentive is. Essentially, you can claim back 1,000 Rand per learner, per person, not just learner, but this is applicable to learnerships. You can claim back 1,000 Rand per person per month. We've just had an increase of the minimum wage level from 23 Rand, from 21 Rand 69 to 23 Rand 19. And that's about under 4,000 Rand a month. With the employee tax incentive, you can basically claim back 1,000 Rand per person. That's a 25% saving on your employment bill. And that's a very, very big thing. Another thing that's not quite related to SARS benefits, but maybe I just want to highlight because it comes to mind, is the minimum wage itself. What people know is that minimum wage is what it is at the moment, 21 Rand 69. They also know that there's a minimum wage of about 15, 16 Rand if the person is a learner. What they don't know is that you can pay a learner right down to 8 Rand something, I can't remember the exact amount, per hour, right? That is very low. So you can actually pay a learner in certain circumstances. I must just emphasize that terms and conditions apply. You can basically pay a learner about under 1,500 Rand in terms of employment. Now, I know it gives a huge debate as to is it ethical, is it moral, and all of that type of thing. But notwithstanding that, if you look at that type of expense relative to what government's paying on 3 Rand 50, or relevant to what people are saying, what the bread basket is, there talks about 595, and there's another talk about 1,300 rand. At least it's an opportunity. And remember, this is skills development. This is not providing a job to a person. This is providing a person the opportunity to gain the skills. I know it's saying the same thing. It's two sides of the same coin, but it is something that can be worked on. On the tax allowance, as I said, I'm not going to say too much here, but it is a very, very big lucrative thing. And suffice to say that when you plan your skills development, to what extent does your rebate or your tax allowances, is it a benefit to your net profit before tax? You know, and sometimes it's good, and of course, dealing with disabled people, it's better, right? Because for a tax allowance of 80,000 rand for a non-disabled person, tax allowance of 120,000 for a disabled person. Then another thing that people don't always realize is that if you look at any expense that you have in the area of skills development, automatically it's a tax deduction. So if you look at all of this, and I'm just going to throw numbers at you. DG grants, you get about 60,000 rand, depends on the SAIPA. And once again, I've got services SAIPA's numbers in my head. 60,000 as a grant, you got 12,000 rand, 1,000 rand a month for the employee tax incentive. You got a tax allowance of 120,000 rand, and the cash value of that is 33,600. And the tax deduction, you're going to pay stipend, you're going to pay for training, and whatever the case may be. Let's assume your costs are 100,000. So you kind of got the tax value of that spend of about 28,000 plus 33,000 for tax allowance gives you about 50 odd thousand, plus incentive that takes you to nearly 80,000, and then the DG grant from the SAIPA takes you to about 140,000. So if you look at that as the financial benefit, less the cost of about 100,000, your client or your employer is sitting with a net benefit of 40,000. And I'm going to come back to that 40,000 later on when I want to demonstrate the opportunity that that skills development presents, or Learnerships presents to your industry as a whole. In fact, that's my next point. So give me a second to get there. So let's look at these opportunities. So if you, for example, are in employ, right? And of course, in employ, I always say to people, I know you're getting a 13th check, so let me help you get a 14th check, right? Or of course, if you're in business, it's a matter of how do you utilize disability skills development for your own growth and your own benefit or your company's benefit. And the one is directly through Learnerships, whereby you can look at how can your client or your company implement skills development and tick boxes. So let me just summarize that. It has got to do with the tax benefits. So as I explained earlier, you possibly have a 140,000 rand financial benefit and 100,000 rand cost. So you are implementing skills development at a profit. So you basically establishing another cost center. Then of course the triple BEE, and as you know, the skills development component carries about 25 points on the scorecard. So by implementing Learnerships and successful execution, and I must emphasize, you gotta basically, the learners as far as I know don't have to necessarily be competent, but in fact they got to be competent because they need certificates of completion. So you once you got that competence, you basically get your points. So that's a very, very important process. So that's the second box that gets ticked in terms of the Learnership side. And then, of course, the third side is disability employment equity. Now, I just need to pause on that as well, which I should have mentioned earlier. With the new amendments being passed, I think they passed already, whereby there is more emphasis on companies achieving certain targets. Within those targets are disability targets. So this year, all companies have to redo the employment equity plans. They're starting from scratch. And it's important that they demonstrate disability clearly there. Now, for certain companies and certain businesses, are going to say, oh, same old stuff. This thing started in 1998. It's over 20 years later, and do we need to bother? Yeah, you're right. Do you need to bother? Catch me if you can. You can have that strategy. But what a lot of companies also think about is how can they be better in the industry, right? And how can they get the edge? So compliance is very important to them. Either way, disability is going to play a bigger role. And in that is the opportunity that it presents for skills development facilitators. So how do you do that? Firstly, if you're in a company and you are able to demonstrate to your employer or to your company that by engaging with disability, it's going to add to the bottom line. Now, I like to refer to the bottom line as the triple bottom line because, yes, it's going to have financial benefits. Yes, we are going to show that we, bettering the environment. It shows diversity. And thirdly, from a societal point of view as well, we are inclusive in terms of what it is that we do. So you can give a good argument for that triple bottom line, and that you in your role as SDF in your company is adding this value. And of course, I said earlier, who knows, you may even get a 14th check for your troubles. If, for example, you are a business, you're a consultant, and you have clients that want to get into learnerships, or you can say to them, let me show you how you can firstly benefit financially from the learnership processes, which I demonstrated earlier, the 140,000 income, less than 100,000 rand cost. And in the process, you are able to earn the triple B double E points for your client. That makes a big difference. Then in terms of triple B double E, I find there's a big disjuncture between the profession of the skills development facilitators and the triple B double E consultants. Now, I could be wrong, and I know I may be opening up a can of worms here, so forgive me. But the reason the disjuncture comes from SDFs mainly reporting to the HR divisions, and the triple B double E consultants are more looking at strategic management or financial management. So there kind of is a disjuncture there. However, just imagine a collaborative world where the SDFs go to the triple B double E people and say, well, we're going to make your lives easier, because at the end of the day, they need the documentation that you generate as an SDF or that you put together for the client. They need that. And if you can feed into that, that relationship will grow much stronger. So I know I could be putting the cat amongst the pigeons there, but I think within all this to a large extent kind of gives you these types of opportunities. I've ended off a little bit earlier in terms of my my talk, which maybe means I can take a few more questions, Angela.
Thank you, Rustim. We do have a question on our WhatsApp group, which may be relevant to what you're chatting to us about today. The question is, they would like some more information on the new national minimum wage and learnership stipends for unemployed people. Does it affect the stipends?
Yes. So the minimum wage has got a couple of categories. The category that you'd remember best is the 21 Rand 69, which has just gone up to 23 Rand 19. That's what everybody knows. Then the category of farm workers and domestics, that has now been included in that. It's no longer a separate category for that. It's included in that. Then you get learners, and there's a special rate for learners, and there's actually a sliding scale for learners. Like I said earlier, and it's quite a lot of levels, but essentially you will look at about that 15, 16 Rand per hour, and then it goes to as low as 8 Rand per hour for in certain circumstances. There's a special gazette, it's just been renewed, And Angela, if I can forward it to you directly, and then you can distribute it amongst your members if you don't have it already. I don't know if that answers your question.
That would be most helpful. Thank you. Thanks very much. Just have a question from my side. At my organization, we have a panel of doctors who are tasked with evaluating each person that is coming in with a disability, whether a learner or an employee. And regardless of whether that person comes in with their special doctor's note that they're supposed to have on employment. And the feedback we've been given from these doctors is that a person that has been stabilized with medication or any other medical interventions like prosthesis, etc., they can no longer be regarded as disabled. And my personal view, I probably shouldn't be sharing my personal view, I think it's grossly unfair, and in my mind it sends a message to the disabled person that we're disregarding their disability. Perhaps you can share your knowledge with us on your approach other businesses take on the matter, and maybe the legislation, what that says about this.
Yes, that's a very, very contentious issue. So let me give you myself as an example. I've got cerebral palsy and I'm a wheelchair user. But in a corporate environment, considering that the ramps and the lifts and all of that is there, I am faster than any employee in a corporate building, purely because I'm on wheels, right? And by me pushing my wheelchair, I'm basically much faster than anyone else. So yes, if I got my disabled toilets that I've got available and I've got the lifts that I've got available, what makes me disabled, right? And if you're looking at me now, then you can see I'm on the beach at the moment. So, what's wrong with me? And in a case like that, if I'm reasonably accommodated, where's the disability? However, if a person is classified disabled, in other words, they've got a medical diagnosis that they come with that is verifiable by a company doctor, then, and the disability is verifiable, not whether the person can cope in the environment. In other words, there may not be a reasonable accommodation required. Like myself, for example, if I go into a company, I need very little type of accommodation. The table may need to allow me to go under the table. Some tables got these things in the middle of them, I can't get under it. Then yes, you can have that debate, but I am disabled. I have proof of disability. There's a doctor that says, in my case, a specialist, that says that I got cerebral palsy, spastic diplegic, and I use a wheelchair. So that makes me disabled. Your doctors basically are verifying that, which means I'm disabled. So I am disabled. So I can be counted in your stats, and I am disabled.
Thank you for that. There's another question on our chat. Can I claim for employee tax incentive on learnerships? I know about the tax rebates, but I want to know whether I can claim for employee tax incentive on both programs if a company has interns and learners.
Yeah. So what a lot of people get confused about is that a learner on a learnership is an employee. So if that is the case, that they are an employee, then yes, you can claim employee tax incentives for them.
Thank you so much. Really, that looks like all the questions. I really appreciate your time. We all appreciate your time this morning. And if you could share that document with us, we can share it with those who are on the chat this morning. And thank you.
There's a question on the document. Can I just drop it into the chat while I'm still online? And I'll email it to you.
Angelique, would that be fine?
Yes, that's perfect.
Okay, I'll do it in the next 5 minutes.
Thank you so much.
Okay, thank you very much for the opportunity to present.
Thank you. Cool. And yeah, the next topic is linked in some way to what Rustim had to chat to us about. I'd like to introduce our next speaker, Mr. Mahomed Kamdar. Mahomed has been an employee of the South African Institute of Professional Accountants for 11 years now. SAIPA is a professional body just like ours, and they are responsible for ensuring the integrity of the accounting and tax profession. And Mahomed's role there is to advise and present to SAIPA members on tax matters, as well as prepare submissions to SARS, National Treasury, on behalf of SAIPA and its members. He also has a role in educating future members of SAIPA who wish to write their board exams on tax. And please remember, Mahomed is not a skills development professional, and so he may not be able to speak fluent Sakwish, but he can most certainly speak Taxwish. So welcome, Mahomed, and thank you for joining us this morning.
Thank you very much for this invitation. I just want to make a few comments. If you have further queries in regard to this presentation, I suggest that you email it to Angelique or to Angela, please, and then they will pass it on to us. So here you have in front of you the agenda for this presentation. I've also given all the material in relation to this presentation to the organizers of the meeting yesterday already. So you should have copies of it. So here's our agenda very quickly, and we're going to continue on the next slide. I will stop at item number 4, where we say question and answers. And officially I've been given half an hour. So I'm determined to finish the presentation within the allocated time. So under item 4, we've got question A, that will be the last item. And then the other items there, I submitted a separate slide for additional information purposes, in case your members and the audience would have additional queries in this regard. But you have the material before you, so it shouldn't be a problem. Now, the organization or the organizers of this meeting cannot set my agenda, and they wanted me to discuss what's the difference between a tax benefit and a tax investment scheme. But let's look where we are. Currently, government holds a religious view that labor skills need to be enhanced. Government is very serious about that. So they're going to do what it takes to make sure that labor skills are enhanced so that it can increase the productivity at the workplace and, of course, improve the economy. They're very serious about that, that there has to be some kind of skills benefit. So when you have a tax investment scheme, tax incentive scheme, is that government is telling you, under normal circumstances, we will not undertake a certain transaction. But we're going to use tax as a leverage to incite taxpayers to behave in a certain way. So therefore, it is called a tax incentive scheme. If you change your behavior as a taxpayer, we're going to give you a tax relief. So that's a tax incentive scheme. Now, the issue is, how is that different from a tax benefit? Now, that was a question proposed to me by the organizer. A tax benefit is like this. If you're a company and you incur an expense in relation to that business, so SARS will say, I give you an example on the screen. You pay salary or you pay office rental. These expenses are in direct relation to the company, business activity. So SARS will say, whatever income you come in the form of sales, there's a business expense, and you will get what is called taxable income. So, and your tax is based on this taxable income. Your tax is never based on the total receipt that the company earns, but the gross income, this business expense, and taxable income. Now, this is a tax benefit because we have incurred an expense in relation to your business. But SARS and the government is saying, we want the taxpayer now to change their behavior. They must do something that will not do under normal circumstances. So the tax incentive is like an inducement to a taxpayer to change their behavior. So that is a tax incentive scheme, and that's the difference. So SARS is saying, or the government is saying, under normal circumstances, taxpayers will not, or employers will not go the extra mile and try to develop skills of the employees. So SARS or the government has come up with a very generous plan and always address a Section 12H learnership agreement. So if you behave in a certain way and you enhance the skills of our employees, is a reward for you in terms of tax liability. So this additional deduction that you get, which entices employers to undertake a transaction they will not normally take. So if you like, for example, look at the tax legislation. I'm having difficulty in changing my slides. Just bear with me. So if you undertake a certain, as an employer, if you undertake a certain transaction, you're going to be receiving an additional deduction. So that is why the learnership agreement, if you look at the title in the Income Tax Act, it says additional deduction. You will get an additional deduction. But I want to make some general comment before I continue, is that the learnership agreement has been extended by a further 2 years. So originally it's supposed to end 1st of April, 2022. So all learnership agreements signed before 1 April, 2022 will remain in force because you could have taken a 1-year learnership or a 3-year learnership, and you can still get a deduction provided it was signed before the 1st of April, 2022. It has now been extended to the 31st of March, 2024 by another 2 years. This simply means that if you sign any learnership agreement before the 31st of March, 2024, then you will still be eligible for the additional tax relief. Now, SARS is not going to stand in a street corner and give everybody tax relief because they have some kind of learnership agreement. There are rules that need to be followed. The first one is that the employer and employee must sign an agreement before the 1st of April, 2022. Well, now it's extended to the 1st of April, 24. The employee and the employer must sign an agreement, and that agreement must be registered with the SAIPA. That is a very important requirement. And the learner must be an employee of the company. All right. And the training must be related to the trading activities of the employer. So you cannot hire somebody, you train them to become a domestic worker, and the domestic worker works in your private residence. No, it must be somebody that you're going to hire in relation to the business activity. So you're going to get two kinds of deduction. The first one is called an annual allowance, and the second one is called a completion allowance. Now, in order to determine which of these categories of allowances you as an employer are eligible for, you have to be mindful of the NQF level of the employee. And secondly, there are rules that saying that you could have more than one employer or you could have had a change in employer. So the tax rule make accommodation for all those scenarios. So my question, okay, so now I made it clear, you get two types of allowances. An annual one where you're entitled to an allowance in any year of assessment in which the employer and employee signed a registered agreement with the SAIPA. So when you commence a learnership program, you're entitled to an annual allowance, but based on, you will say, like the commencement of the agreement, of the learnership agreement. Now, once you complete the training as an employee, then the employer is eligible for a completion allowance. I'm just going to stop there. I just want to explain to the organizers that I don't get to see any questions coming in. So are there any questions?
Not so far, Mahomed. I will be monitoring that, and if there are pertinent questions, I will raise them.
So very quickly, I want to ask the attendees of this meeting, is it possible to get an annual allowance and a completion allowance in the same year? It's like a quick poll we can do. I just want to hear the views of the attendees. Is it possible for us to get an annual allowance and a completion allowance in the same year? Angela, did you get any response?
So far there's a no, and then I do actually have a question from Sharon that she's asking, wants to ask verbally, but regarding your question, practically impossible, no, everyone's no thus far. And Renee said only if the 12 months falls within the same financial period. Then Natasha says first one is commencement allowance and then completion.
Okay.
So perhaps you want to just answer that question, and then we can open up Sharon's audio so she can ask her question verbally. Okay,
very quickly, the answer is yes, you can. So I'm glad we're having this presentation because the focus is on the tax nuances of the learnership agreement. So the answer is yes, you can get an annual allowance and a completion allowance in the same year. But what it means is that in that year, you probably would have had 4 months or 5 months of the annual allowance coming in, and you completed the allowances, you completed the program in the same year. So it could have been that the person has taken a 3-year program, all right? And each of those 3 years, you're going to get an annual allowance. But in the last year, you would have spent a few months completing the program. So you have an annual allowance and a completion allowance in the same year. So the answer is very simple. It's possible. But I'm going to come to that just now as we go through the example. All right? Now it's very clear that you have an annual allowance and a completion allowance. Now, what's the defining moment of an annual allowance? Annual allowance, always understand, it's about the months. All right? That means it refers to the allowances on a monthly basis. So if you have a learnership program for 12 months, that means the annual allowances depend on the number of months, and you do a pro rata calculation. I'm going to come to a minute about pro rata, what we mean by pro rata, all right? But understand the defining moment of an annual allowance has to do with months, all right? Now, with completion allowances, we look at 2 scenarios. If the learnership is for less than 24 months, or the learnership is for a period longer than 24 months. So those are the things that will define completion allowances and annual allowances. But remember, all of them depend on the NQF level and also whether you are disabled or not. Now, I'm glad I overheard some remarks by the last presentator about being disabled. So I'm going to come to all of that in a few minutes. But very quickly,
Mahomed, can we just pause on that and just get Sharon's question to you?
Sure, go ahead.
Thank you.
So Mahomed, I want to ask a question. Are these qualifications linked to learnerships that are linked to historical qualifications?
Say that again. Are these what?
So these learnerships that you are talking about. So one of the challenges that we're having as skills development practitioners is that you can register a learnership. So I have currently got a learnership that is registered with the construction SAIPA, but that learnership is expiring in 2023. So they are basically saying to us that we are not permitted to enroll any more learners after 2023. So even though SARS is allowing us this tax incentive past the 2023 date, we cannot actually use it because that learnership is expiring. And there's no platform for us to actually continue with that learnership past the 2023 end date.
Okay, now currently, you know, the legislation reads as follows. You must have signed this agreement for existing agreement on or before April 22nd.
Okay,
April
so if we sign it
2022.
before April 22nd, then we're allowed to continue with it up
Yes,
until the 2027 mark.
Yes. Now the thing is what SARS is saying, you must have signed the agreement before those dates, meaning they understand that the benefit will continue well into the expiry date. But that's fine. The defining moment there is when the agreement was signed between the learnership and the SAIPA.
Yeah,
So if you sign before April 2022, and it's likely you could take in a 2 or 3 years learnership, you will still be eligible for the tax relief, although it's going beyond the expiry period. But the expiry period only relates to when you sign that agreement. So in other words, according to the existing rule, if you sign that agreement, say on the 2nd of April, then that agreement becomes invalid. You're not eligible for any tax deduction. But now, based on the new rule, which is still going to be passed, it says you must now have signed the thing before the 1st of April, 2024.
Do you have anything that's in writing that you can send us? Because
I'll give it to the
Angela,
organizers of this meeting.
Because yeah, I would like to have that in writing so that we can forward that to our SAIPAs, because we're having a problem having the SAIPA re-register learnership programs for us, because that's the process that takes long, is getting the SAIPAs to re-register learnership programs if we're doing extensions of scope or re-registrations. It's not SARS that's the problem, it's the SAIPAs and the registering
Don't
of
worry,
various
we can give you that. But let me explain something to you. This tax legislation was passed in Parliament in November last year. All right. Now, I'm not sure yet whether the president has signed it. For it to become law, the president must have signed it, right? Now, with tax legislation, they don't normally sign it the day it gets passed in Parliament. So when I checked at the time when I was invited for this presentation, it hasn't been passed in Parliament, hasn't been signed by the president. So now that I'll give you the clarification is, so far, I haven't heard anything to the contrary that the president is not going to agree with that learnership extension. All right. But I'll give it to you in writing, not a problem. It's very easy to do. Okay. So I'll just give it to Angela. That's fine. Not a problem. But the thing is it's definitely been extended based on what Parliament passed in November 2021. All right. It's a tax legislation coming into effect in the current year. All right.
All right. Thank you.
You're most welcome. Now I just put down here the NQF levels. This for the purpose of this meeting, so you have an understanding. So generally, everybody in the demarcation is normally between NQF level 1 and 6. So it will include, for example, metric, higher certificate, and diploma. And then the next category will be NQF level 7 to 10 for tax purposes. So given that, I'm just going to continue. All right. Now, there's some practical consideration that we picked up with our interaction with our SAIPA members and in relation to the agreement. You see, once you sign an agreement between the employee and the employer, all right, you could hand it over to the SAIPA. Now, the SAIPAs have their own internal administrative process. That can take really very long. Now, the thing is this. I'm just going to take you to the next slide, because all these verbal things, items that I explained in the previous slide, can be best explained in this diagram. So let's say, for example, in tax, you know that generally you have a tax year of 12 months. It doesn't necessarily coincide with the calendar year. Like the tax year doesn't start 1 of January and end in December. It can be any 12 consecutive months. So hypothetically, let's say, for example, year 1 is the 28th of February this year, okay? But the year actually started 1st of March 2021. So this year, the tax year will end 28th of February this year, 2022. So you get it, 1st of March last year to February this year is one tax year. For the purpose of this presentation, I just call it year 1. But you get a picture. It's the 1st of March last year to the end of February this year. Now that is a 1 year, all right? The question is this: if you get an employee who starts work in year 1, January the 3rd this year, because January the 3rd this year is part of the current tax year, if you look at the 12-month cycle that I explained to you. So here you have an employee that would work 1st of January this year, but they sign an agreement, a learnership agreement on the 10th of January this year. Now, you know, often it's likely that in terms of the tax year, the agreement will only get approved or registered with the SAIPA 1st of May 2022. Now, in terms of a tax language, the tax year ended in February this year. 1st of May this year is part of the second tax year, year 2. Now you're only submitting or getting approval or registration confirmation with the SAIPA in May this year, but that's in year 2. So SARS is saying you can still get the deduction for year 1, although the SAIPAs may have only registered it formally in year 2. So that's 2 months year for January and February of year 1. The employer can still get the deduction, because in practice, what happens? This is the end of the tax year. February 28th is the end of the tax year. Okay. Now, the company, although the tax year ends here, the company still has 12 months in which to submit its tax return to SARS. So the company must submit its tax return to SARS before February next year. The tax return for the end of year 1. Now, I'm going to keep it very simple because I understand the audience is not a very tax-savvy audience. So I have to explain to you the financial year, because the tax return is always submitted retrospectively. You submit it before that date, but it's for the prior tax period. The same with individual. July each year, you're going to start submitting your individual tax return, but it's for the previous year tax year ending February 28th. For example, in July this year, you're going to start submitting your tax return, but it's for the period ending February this year. So you understand it's done retrospectively, the submission of your tax return. So basically what SARS is saying, okay, this thing has been submitted late or approved late or registered with the SAIPA late. Because you got time to submit your tax return, you can still claim the appropriate deduction for the January and February month in year 1 when you're submitting your tax return. So you don't even have to wait for the submission of the tax return for the company. The moment 1st of May is been approved, the company can get the deduction in the current tax year that we are talking about, the year 1, 3rd January and February then. So that's the remedy SARS is offering, that they're giving you a grace period. Within 12 months of the next year, of the next tax year, not calendar year, next tax year, the SAIPA must have approved the learnership agreement. All right. So now I'm going to tell you a bit more about the annual allowance. So basically, the employer will qualify for the annual allowance during any year of assessment in which it has been registered. So in terms of our, can you see here, during any year of assessment, that means tax year, not calendar year, tax year. So if you if you, for example, register the agreement, I'll go back to the previous slide, in January or February, and it's been approved, that means they can get the allowance for year one, for the annual period. All right. Now, already we understand the NQF level is normally 1 to 10. And I explained already, you can only get the allowance if the training is in relation to the trade carried on by the employer. So the learning must be in relation to the trading activities of the employer. And he must derive an income. This is the tax concept. So you have to have an income. The employer must derive an income from that trading activities. And they conduct a learnership agreement in relation to the income. So that's an annual allowance. Will qualify for the annual allowance at the time when the agreement is signed. Now the same allowance, the same requirement also applies to annual allowance, but there's a difference. There's an additional requirement. You must have completed the allowances during the year of assessment. So obviously, for you to complete an allowance, you must have an annual allowance. Would you agree? Because if there's no annual allowance, it means there was no registration with the SAIPA. So this requirement will also apply to an annual allowance, provided you have completed the learnership agreement. So if you haven't completed the learnership agreement in that year of assessment, you can only get an annual allowance. Okay. Now, when it comes to tax, when we tell you something, we must also tell you when something does not apply. So here, an employer will not qualify for the annual allowance during any period, I mean tax period, if it's not registered. Now you see in bracket, I've got the subject to the deeming provision. So be careful of that. So the thing is this, SARS on one hand telling you, we're granting you a relief or a remedy should that agreement not be approved and registered with the SAIPA, because they understand it does take time. But there's also a possibility that the SAIPA may not even agree to it. Sorry, I forgot to inform my employers that I am on a webinar. I need to inform the receptionist. But anyway, we'll continue for now. The other requirement is you must be in employment. So that means the employer must have hired the learner as an employee. And the way of defining that in a tax language, the employer must pay PAY. Now, I assume you know what is PAY. If you earn a salary, you pay a monthly tax to SARS in the form of PAY. Otherwise, you're not an employee if you're not paying a PAY. Of course, if you're earning an income below the tax threshold, you will not be paying a PAY. But the employee will be eligible for a PAY. That's the whole point we're making. And they must receive remuneration. Now, what I've done with this slide, I've combined all the requirements for, you will see annual allowances and you will see completion allowances. So it's easy to understand it like this. So my suggestion to you is that if you're working in skill development and you have an office space where you work from, you keep this table, put it onto your wall in your office desk, or if you're working from home, put it onto your wall, because this is what you need. Now, if people explain this whole thing in a different route, it's much more complicated. You have to understand this in a form of a table. So this table is very original. It's SAIPA's original work. But let's say now we're in annual allowance. So if you're in annual allowance, you understand when you sign the agreement, and there is now a learnership agreement. Upon signing, you qualify for what is called an annual allowance. It's like the date you commence the learnership. Before it was called a commencement allowance. They changed the name subsequently to annual allowances. So if the person has an NQF level from 1 to 6, and you don't have disability, you can get 40,000 Rand of annual allowances. And if you're disabled, you get an extra 20,000 Rand So the total is 60,000. That's for your annual allowance. All right. Now let's look. If you have NQF level 7 to 10, can you see that? NQF level 7 to 10 annual allowances is only 20,000. And you get a disability of 30,000. Now, there's one thing I forgot to tell you when I was discussing tax incentive scheme. You see, when the people who design tax policies, like for example, tax incentive scheme for learnership, they have an underlying philosophy. You see, tax policy makers don't just make up tax rules in a vacuum. It is defined by underlying philosophy. In this case, is to ensure that employers do what it can to upskill their employees. So it's driven by a policy. A tax legislation, it always has an underlying philosophy. It's driven by a policy imperative. In this case, stimulate and promote learnership level. Now look at this. You see here, level 1 to 6, your annual allowance is 40,000. But if you go from 7 to 10, it is 20,000. What conclusion would you arrive? Why is there a discrepancy between somebody who has no disability but falls between level 1 to 6 and gets the larger allowances, and from 7 to 10, you only get a 20,000 rand allowance? So we do a quick poll and just see what explanation people give you. Why is there a discrepancy between the allowances based on this level, 1 to 6 and 7 to 10? Let's do a quick poll. I'll give you guys 2 seconds.
Sure. Just watching the chat. From my opinion, I think they're just trying to encourage further education from matric upwards, but that's my opinion.
Okay, very quickly. You see, government holds the view that the level of category that deserves a lot of attention in terms of skill development is from level 1 to 6. That's the only reason. They hold the view people at a very low level of skills are the ones required further training. So that's from level 1 to 6.
So Natasha got it correct. So Natasha said because people at lower levels and disabled are needing more support. And Jacques said development at lower levels prioritized.
Yes,
so,
yes.
On the right
so
track.
you see, if you remember that philosophy and you're doing that calculation, you'll never forget that. 1 to 6 gets a higher tax deduction. So you'll never forget if you understand the underlying philosophy, what's driving the policy. All right. So now we got that correct. So now we're going to go to disabled people. They get an extra 20,000 rand for annual allowances, but they also get 20,000 when it comes to the completion allowance, 20,000 and extra. All right. So now the completion allowances, we know you must have completed it. All right. So in the year in which you complete, you'll get a completion allowance. So it could be in that same year, you were still like doing the annual, you're still doing the program. And let's say in a tax year, only in the 6th or 7th month of the tax year, you have completed it. So in the 7th month is when the company can get their completion allowance. But in the beginning of that tax year, they will still be eligible for the annual allowance. That is our point. So you can get an annual allowance and a completion allowance in the same year. If in the same tax year, you're still studying for the program and you get an annual allowance, what they call commencement allowance, and much later in the tax year, you complete, so you'll get a completion allowance. All right. So the idea is that the completion allowance will be the same as the annual allowance if you are disabled or able. So if you're able, the completion allowance and the annual allowance is the same for each of the categories, whether you're disabled or not. Can you see that? But now, when it comes to learnership from 7 to 10, we all agree that it's going to be the lower deduction, 20,000, 20,000. But what do you see? The disabled amount increases to 30,000. Why is that? If you're disabled, you can get more. It's working in a reverse direction in terms of in terms of size of the disability. Can you see that? If you are in level 1 to 6, the disability is only 20,000. But if you are level 7 to 10, the disability deduction is 30,000. Can you see that? Now, what's the reason for that? Well, I'll just answer you. I won't do a poll because we're running out of time, I'm sure. The point is this. They argue that if you are disabled and you are a senior person age-wise, 7 to 10 will be more senior person. You're likely to have more responsibilities. But this allowance goes to the employer, not the employee. Do you see the point? It's for the employer. You're enticing the employer to undergo this training. Now, very quickly, this is what I wanted to explain about disability. I heard the last few comments about what is a disabled person in terms of the last presentation. I'm glad I did that. But let me tell you something. For the employer to get this disabled allowances, you have to follow what the tax rule is saying about disability. The tax rule has a very specific requirement of who is a disabled person. All right? So to get this benefit, you don't employ the English understanding. I mean, the English language understanding of what a disabled person is. You have to employ the tax understanding of what a disabled person is. To cut this conversation short, if you are disabled, you go to your practicing doctor. They know they must fill in this form called ITRDD. Most medical doctors know about this form, ITRDD, confirmation of diagnosis, and they will know the rule that SARS used. Most GP and practitioners know about that form. They probably keep copies of it online, on the desk, because they know they have a request. You have to follow the doctor's orders, whether he agrees that a person is disabled. And in that form, everything got to do with tax legislation. So I'm just going to cut the conversation short, is to say, you only become disabled from a tax perspective if your doctor fills that form successfully. All right? Okay. Now I'm going to go back to some defining moments. You see, we are saying to you, for annual allowances, if you eat period of less than 12 full months, that's a defining moment during any year. Now, remember one thing, we're talking about less than 12 full months, all right? You get a pro rata of 20,000, but believe me, it's based on number of full months. Now, what are we saying there? What are we saying there? So let's look at this very quickly. If an employer has a year of assessment that ends 31st of December, remember your tax year can end in any month of the year, but to make this simple, I say 31st of December, and the tax year starts in January the 1st and ends in December. That's a 12 month. But you have only a 9-month learnership, which they sign on the 10th of February. Now, remember one thing, 9 months, let's say from the 1st of January, then you sign an agreement. I'm just moving away from that example on the screen. Let's say you say 9 months, but you start from the 1st of January and it's going to end the end of September. You agree that's 9 months, all right? But the rule talks about less than full 12 months. That's the tax rule. It's there in the tax legislation. So the problem now, what happens in terms of the English language? If you start, let's say, on the 10th of February, all right? So would you agree? 9 months will be 9 plus 2, 11. So it will end, let's say, 9th of November of the same year. Would you agree? That's your 9 months. So the problem is this. If your learnership agreement starts in the middle of the month, that's where the problem is for tax. In English language, if you start 10th of February, you're going to end 9th of November of the same year. That's in terms of the English language. But in terms of tax, it's 12 full months. So if you look, now this example I give you is taken from the the SARS interpretation note 20. I took it out deliberately from that note because it is SARS who's telling us this. So I'm not making this example. The problem is with this. If you have the same learnership now, also for 9 months, the problem is now two things. It can start in the middle of the month, all right? Or it can start in the middle of a tax year. So we say the same 9 months, but now they start 15 October. Now, you know, in 15 October of the same tax year, 31st of December, and it's going to end on the 14th of July in year 2. All right? Now, this is where the problem lies. The rule says 12 full months, but this is in the middle of the month, and it's also in one tax year. Part of the training program is extended to the second tax year. So in terms of months in calendar year, 15th of October is going to end 14th of July of the previous month. In year it starts 15th October in year 1 and it ends 14th of July in the next year. So yeah, there's a problem here. Besides the middle of the month, it falls in 2 tax years. But the rule says 12 full months. So for year 1, if you look at this in year 1, that means the year 1 for tax purposes ends 31st of December. SARS is saying you must calculate full months. So which means you don't count October, you count November, December, you count November and December. The rule says 12 full months because annual allowances is about months, but 12 full months. So for this example here, 15th of October is the middle of the month. It's not 12 full months. So you can only get allowance for 2 months. That means November and December for tax year 1. All right. Now for tax year 2, you're only going to get 6 months. That's what you have to understand because it's talking about 12 full months. So here I give you an example. Here I give you an example. They get the full 12 months. All right. They enter level 3, 12 months, and the December year is in December 31st of the same calendar month. So he gets 12 months. This person here gets 12 months. All right. So you get allowance for the full 12 months. And they also finish. So here you got allowance for the full 12 months, 40,000, 40,000. And the taxable income is reduced by 80,000 for the year. So you're paying less tax. Now, if the same person was disabled, they will get 60,000 for the allowances because it's 12 months in the same year. They will get another 60,000 allowance in the same year because they started the program in the same year and it was completed in the same year. So that's 120,000 deduction you get. All right, if it was disabled. Now, with this example, we change things a bit. You are 8 months and you have a December year end, but you only finished it in August that year. So now annual allowances, because it's for 8 months, you have apportioned the allowances. For annual allowances, you know, it's 40,000. So you only use per month. It's an 8-month program. You divide by 12, you multiply by 8. But you also complete it in the same year. So the completion allowances is either less than 24 months or more than 24 months. Remember that rule. So the completion allowance you get for the whole year, for full 40,000, because you completed it. All right. Okay. If Kaya is disabled, he's going to get annual allowances of 60,000 because, and he gets another completion allowance of 60,000 if it's disabled. All right. But the total allowance that the company gets is 120,000 for the tax year. Okay, this is a good one. This is for 12 months, the annual allowance for 12 months, but it started in July year 1. And the employer has a December year end of December. So he only completes 6 months of the training in the first year, year one. Year one, I mean from a tax perspective, all right? It's ending in December, the tax year ends in December, but what happens now? The allowance for 12 months, but 6 months into the next year. So the annual allowances will get for 6 months if it's an able person. But they never complete the program. So in the first year, you're going to get 0 completion allowances. But if the same person was disabled, they will get 40,000. Oh, sorry, this is also annual allowance for the second year. We'll be discussing annual allowance for the second year. In the second year, they have 6 months of the annual allowances in the second tax year. So you get 20,000 again. But you get a full 40,000 because they completed the training in that tax year. So you get a full completion allowances. You don't apportion the allowances per month. That's the defining moment between an annual allowance and the completion allowance. Annual allowances done on a pro rata basis per month, and you understand what is the definition of month in a tax language. Completion allowance is either less than 24 months or more than 24 months. That's the definition. So here in year one and year two, assuming the person is not disabled, this is what you're going to get as the employer. You are able to reduce your taxable income by 20,000. And if you are in a second year, you will get a deduction of 60,000 as an employer. Now, if Kaya is disabled, so he gets 60,000, disabled people get more allowances, right? Times 6 divided by 12. You get 30,000 and no 0 allowances, no completion allowances because it wasn't completed. And then the same rationale is applied if you are for the second year. Second year, it will be raised to 60,000 because the person is disabled. And you'll get a 60,000 completion allowance in the same tax year. All right. Now, this is 18 months. That means it is more than 12 months, but it's less than 24 months. All right. So now, bear in mind, the completion allowances, the defining moment is less than 24 months and more than 24 months. How are you going to do that calculation? We take the same NQF level 3. All right. And we say that year, 1st of January, year one, it has a December year end. But this program is for 18 months. That means the first 12 months will be covered in tax year one. But it's only going to complete the training at the end of June in year two. So here in this example, the tax year ends on the start on the 1st of January and end on December of the same year, December 31st. And the training program is for 18 months. So you had a full first tax year one. For year one, you have the full 12 months, and the second year is only 6 months. All right. So now that's the background information. So for year one, we're calculating both the annual and completion allowance in this example. So the annual allowances will still be 40,000 Rand because they finished the full 12 months for annual allowances. All right. But they haven't completed the program. So there will be 0 completion allowances. So the employer can reduce the taxable income by 40,000 in year one. Year two, the annual allowances, the period was only for 6 months because remember it's 18 months. All right. Let's go back to the previous slide. So for 6 months, but the completion allowances, he completed the full program. So you get the full completion allowances, which is 40,000 Rand. So in this case, the completion allowances is for the whole training program of 18 months. Are you with me? It's in 18 months he completed the program. But for completion allowances, you only use a completed 12-month rule. So you can complete a program less than 24 months or more than 24 months. In this case, it's an 18-month program. Your annual allowances is based on full completed 12 months, not a full completed 18 months. So the rules are different for completion allowances. is done per 12 months. So this person will not get a completion allowance for a period of 18 months, but for the full period of 12 completed months. That is why he only gets 40,000 rand, because he completed a full 12-month training program. If the same 18-month program was done over 24 months, then he would have had 2 full 12 completed months for your completion allowances. Then your completion allowances then will be 40,000 rand plus another 40,000 and 80,000 rand, because you would have completed 2 months. All right, 2 12-month period. Okay. Now the same will apply for. Hello.
Oh, sorry. I just wanted to note that we need to close off on the topic. I don't know if these are questions in the chat, but you can complete your last slide, Mahomed. Sorry for interrupting.
Look, the point is this: 2 things. The employer gets the deduction, not the employee. Understand that the employer gets a deduction, so they get to pay less company tax. All right. That's the first point. The second point, okay, make it the second point, and the third point is this: your annual allowance is done on a pro rata basis based on months. All right. You can get annual allowances and completion allowances for the same tax year. I've explained that. But coming back to now to completion allowances has slightly different rules. It's done less than 24 months or more than 24 months, right? But it's also based on 12 completed months of your learnership. You must have, for you to get a completion allowances, you must have completed the program, right? You can complete the program in less than, say, 8 months. You can get it. But the other rule is what they call less than 24 months and more than 24 months or something like that. That calculation is only based on a full 12-month period. So if you have an 18-month learnership agreement and you're now paying learnership allowance, completion allowances, you only pay for 12 months, not for 18 months. All right? So the completion allowances, it has an extra requirement. The calculation is only based on 12-month completed program. I can stop there. The purpose of this presentation was to discuss with you the basic elements. I was very careful not to draw the conversation more towards tax and to simplify it, because I understand the audience are more involved in skill development, but it's important for them to also understand the tax nuances at a basic level. So I'll stop there. Thank you very much.
Thank you so much, Mahomed. You're getting some lovely feedback in the chat. We really appreciate your knowledge and expertise on this subject. I think we've all learned a hell of a lot, and I think everyone's going to go to your slide pack that you shared with us and go through it again, and probably the recording as well. So we greatly appreciate your time, Mahomed. Thank you very, very much.
Okay, bye. Thank you, Jen.
Thank you, Mahomed.
And thank you for the invite.
Thank you. It's been a pleasure. And without further ado, if there are any further questions, you're welcome to raise in the chat. In general, we are going to be sharing the packs with you. Let me I'll put them on the chat quickly. And don't forget to please log your CPD points as Angelique has shared with you now. Important that you do so. Thank you everyone for your time. I'm so glad that we've got some good feedback from you, and any suggestions for any further topics, please feel free to WhatsApp me, and I will put it in our WhatsApp groups. That's also welcome, and we will see if we can accommodate for specific requests in future. Thank you so much for your time. Have a great day further.